In today's video, we're going to discuss an important topic in the world of trading: crude oil inventories. Crude oil inventories refer to the stocks of oil, both domestically produced and imported, that are stored by countries or organizations. These inventories play a significant role in determining the supply and demand dynamics in the oil market. Traders and investors closely monitor the weekly release of crude oil inventory data, as it can have a major impact on oil prices. An increase in crude oil inventories often indicates an oversupply, which can push oil prices downward. On the other hand, a decrease in inventories suggests a tightening of supply, potentially leading to higher oil prices. The weekly crude oil inventory reports are prepared by the U.S. Energy Information Administration, or EIA. These reports provide valuable insights into the current state of oil supply and demand in the United States. Volatility is often seen in the oil market following the release of crude oil inventory data. Understanding how to interpret these reports can give traders an edge in predicting short-term price movements. Factors such as geopolitical events and OPEC decisions can also influence crude oil inventories and prices. For those interested in learning more about trading and mastering the art of analyzing crude oil inventories, I invite you to check out our Trading Academy, Traders Lessons. At Traders Lessons, we offer comprehensive courses and resources to help aspiring traders navigate the complexities of the financial markets. Our channel on YouTube is also a valuable resource for traders, providing insightful videos on various trading topics. From beginner guides to advanced trading strategies, we strive to equip traders with the knowledge they need to succeed. Make sure to subscribe to our channel to receive updates on new video releases and stay ahead in the trading game.